NVDA. It's what we've all been waiting for. Real quick, want to show you here my model, why I'm above consensus, but still not real bullish on the stock going into earnings. Even though I'm forecasting a beat, I don't think the stock reaction is going to be that great. Could be wrong, but if you're long the stock, I think having some puts to protect yourself, to protect the downside, is the smart thing to do. So here, look, their guidance was for 28 billion plus or minus 2%. I'm expecting 4% growth. And honestly, I think the buy side might be even a little more bullish. So really think the whisper number, I think the whisper number is probably 29 to 29.5 billion. So I think for revenue to really move the stock meaningfully higher, I think it needs to be, I think it needs to come in north of 29.5 billion. All that said, my earnings per share estimate for the quarter is 64 cents. I've seen consensus estimates out there ranging from 58 to 60 cents. So if that holds true, you know, I am expecting a beat in my model. But all that said, I don't think the stock's going to move higher on earnings. And I'll tell you why. It all boils down to valuation. You know, when I look at the other Mag 7, most of the Mag 7, I don't include Tesla in here, but you know, if I look at the other trillion-dollar tech companies and how they're trading, you know, we can see here there's a real solid relationship. You know, it's 85% correlation here, looking at earnings growth and PEG ratios, right? Nobody invests in a vacuum. Every investor has a choice to be long this stock, be long that stock, you know, and even if you're long both, you know, who's to say the weighting for one can't be much larger than the weighting that you're long for the other. And so everything's a trade-off. And so I think it's really important to look at how NVIDIA is trading relative to its, not so much its chip peers, but the other multi-trillion-dollar market cap tech stocks, most of which are involved, you know, heavily involved with AI, but maybe not, you know, like for like comps. So yeah, looking at next 12-month EPS growth, you know, NVIDIA obviously has you know, some super high EPS growth estimates. We're at 58%. But look, the higher the EPS growth, you know, the riskier the market thinks it is. And so the lower the PEG ratio, the price to earnings growth, price to earnings over EPS growth ratio is. And that's not true just for tech stocks. That's true across the board. But if you take a look at that regression formula and apply it to NVIDIA stock, it implies a stock price of $106. So basically, NVIDIA, which is trading, it's down about 2% today, but at the open it was at 129, right? So it was implying as much as an 18% overvaluation. That it was implying that it was overvalued by up to 18% at the open this morning, relative to the earnings growth that investors can get from other stocks that are its peers. Now, you could say, look, Eric, no one in their right mind owns NVIDIA for its earnings over the next 12 months. Totally agree with you. So, looking at my model and the estimates that I have going out all the way to fiscal 2029, of course, people in fiscal 2028, which is really 2027, calendar 27, but in calendar 27, people are going to be valuing NVIDIA on fiscal 2029 earnings, okay? And on my model, it's roughly 13% EPS growth by then. On a company that I have forecasted, look, 100% growth this year, 47% growth next year, moderating, but I'm looking at a $315 billion revenue company in fiscal 2029. Just, these estimates aren't coming from someone who's bearish on NVIDIA. But applying the regression formula to what investors would be looking at 3 years from now, it implies a stock price of $155.60. Okay? So in 3 years, that's where NVIDIA ought to be trading based on this regression, which means, you discount that at their weighted average cost of capital, 12%. That implies shares should be valued around $111. Okay? So net, based on my valuation, not considering NVIDIA in a vacuum, but relative to its peers, the stock is 14 to 18% overvalued. So again, I think it's going to be really hard for the company to beat by a wide enough margin, say anything substantive that can be quantified as to its future that's going to get people more bullish on it than people already are. I think the valuation's pretty stretched here. And so what I would do if I was long NVIDIA, which I'm not, and I'm not short either, I'm not invested in NVIDIA one way or the other. I used to own it. I sold it. If it gets back down to these levels, I'd consider buying it again. But yeah, if I were you, if I were long, I would definitely think about buying some puts to protect myself from a potentially 15-20% move to the downside over the next couple weeks or month. At least into earnings. It doesn't cost you much to buy some puts, and if nothing happens, great, sell them after earnings. I think it really makes sense to protect yourself. Thanks, everybody. I'll be back with another video analyzing everything they said and with updated model estimates after they report. Take care.